And we go straight on to the business news now for you on the programme. And over the past few months, we've seen many ideas really floating around Europe about how to deal with the energy crisis. Charles Pellegrin is with us to explain. We're getting rather closer to a bit of a definitive plan now.
That's right, Stuart. EU Commission President Ursula von der Leyen is meeting with ambassadors from all the EU member states this Wednesday. This ahead of a meeting of EU energy ministers on Friday, and then her State of the Union address on September the 14th. Well, as of now, here's what we can expect to be included in the package of measures meant to help with what von der Leyen has described as astronomical energy bills. First off, and now we will see on the screen, Brussels is pushing for national windfall taxes on energy companies that are, quote, unduly profiting from the rise in gas prices, especially fossil fuel producers and low-carbon power generators, as you can see here. As a reminder, the price of electricity is tied to that of gas, even if the power generators don't use gas in production. Then, reducing consumption by shifting electricity demand away from peak periods. That means getting industry to move production to weekends and nights when possible. Also, to provide energy producers with the sufficient liquidity to deal with rising collateral requirements for wholesale electricity. And finally, applying a price cap on Russian pipeline gas. An important caveat, though, member states have not yet backed the proposals. Meanwhile, the U.S. unveiled details on its $50 billion plan to build up its local semiconductor industry. This is seen as a strategic imperative to end reliance on Chinese semiconductors, and business groups have been pushing for more government support to achieve this objective. There will be conditions, though. Companies who benefit from financial aid will not be able to invest it in advanced technologies in China for 10 years. The U.S. currently produces 10% of the global supply of semiconductors, down from nearly 40% in 1990.
The number one objective of implementing this is to protect America's national security. Every deal we do, every criteria that we evaluate these companies against, it's going to be with a lens toward protecting national security. So we're not going to allow any deals to happen that we think undermine our national security.
So we're increasingly seeing efforts to, quote, decouple the U.S. and Chinese economies. And Chinese customs data for August is showing that the export sector there has struggled. Chinese exports grew by just above 7% in August, and that's compared to an 18% increase in July. That's much lower than the analyst expectations of just under 13%, as you can see in gray. Over there. This because global inflation weakened demand for Chinese goods, and also because COVID lockdowns and heat waves disrupted production in China. The export sector had been a better performer for China this year, but could now be facing headwinds. And let's see how the markets have reacted to this news. Investors seemingly worried about the prospect for growth. As all indices are currently trading, this is in Asia. You can see in China the mixed picture here with the Hang Seng in Hong Kong down by 1% and the Shanghai Composite up by almost 1%. The Kospi and Seoul down over 1% and the Nikkei in Tokyo closing down by 0.2%. Let's have a look at the situation in Europe, where investors are also concerned about the prospect for growth. All indices there also trading lower at the open. The FTSE in London down by almost 0.80%. The CAC 40 in Paris down by approximately the same amount. And the DAX in Frankfurt also 0.2% down. And some developments in Sri Lanka's debt restructuring efforts. The United States Treasury Secretary Janet Yellen said in a letter that the U.S. will support the country and extend financing assurances. This after Sri Lanka and its new president, Ranil Wickremesinghe, reached a preliminary deal with the International Monetary Fund for a loan of $2.9 billion. That was last week. This will help the fuel shortages and high inflation hitting all areas of society. Nick Rushworth looks at how some of the country's fishermen are coping.
These fishermen on the small island of Mannar off Sri Lanka's northwest coast have work. They are lucky other fishermen are at home unemployed. Many who set out to sea are rowing because any kerosene oil available to run the onboard motor is too expensive.
Before, when we had kerosene, there was no issue. We went out to sea. Now, because of difficulties in getting it, we have to struggle and row instead.
The fishermen in Mannar had to cope with no kerosene for months. Supplies have resumed in recent weeks, but the price is much higher, with the Sri Lankan government dismantling fuel subsidies.
A litre of kerosene is 1,800 rupees, $5. Usually in our cooperative, we pay 83 rupees a litre for it. But if you buy it privately, it's 1,800 rupees. Some people are buying the kerosene and working. Not everybody, but those who can afford to.
Sri Lanka is going through its worst economic crisis in decades. The value of the rupee has halved since March. Year-on-year inflation is at 64% and rising. The debt to GDP ratio is 140%, with the country relying on IMF help and hoping to secure debt relief from China, India and Japan. Estimates from the United Nations indicate that more than 1 in 4 of Sri Lanka's 22 million people are now struggling to secure adequate, nutritious food.
That's it for the business update, Stuart.
Thanks very much. Sean Pellegrin there with the business for us here on France 24. We're going to take you now